It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat joining us here in our Chicago studio to take us through the charts. And here to take us through the trades is Dan Deming, the managing partner at KKM Financial. Great to have you both with us. Dan, let's start with just a big picture thought on the market post-Fed announcement. You know, we've got a nice sea of green on the board, new all-time highs across the board as well.
Yeah, a big reaction here to the news coming out of NVIDIA and Intel this morning. Certainly a positive tone to the market. It's helping to support the NASDAQ very much so today. But you're seeing a broadening of the move as well. I mean, you're seeing pretty strong price action across the market. What is interesting is gold is under pressure, as you just spoke about. You're seeing yields actually ticking higher based on some of the data that we received this morning. So again, manufacturing showing signs of life. So that's another factor. I think it's percolating under this market that's holding the sentiment in there as far as, all right, we're seeing some of the slowing coming out of the manufacturing sector. Labor market seems to be checking back into balance with the downtick in non-farm payroll, with the weekly jobless claims. So, I mean, right now it does appear that sentiment is enough here to keep the market in its upward momentum.
All right, and speaking of upward momentum, your first pick is Valero. I know that they hit a new 52-week high earlier this week. Yesterday, I think they touched it about 165, trading just below that right now. You know, walk us through your first trade and why you picked Valero Energy.
Well, yeah, the highlight, really. I mean, because when you think about the energy sector, you think about the fact that crude's been stuck in a range, and yet here we are with Valero going to new 52-week highs. So that's really what I wanted to highlight this stock with the trade example today as the momentum continues to the upside. And again, I think the key here is to probably, because of the move has been so significant, that define downside risk, but able to capture further upside. And so today's call or trade example is just buying an outright call spread in October. The 165, 175 call spread, where you can do it for about $2.95. 2-to-1 risk reward on this capture up to the upside. And again, defining the downside risk should Valero find a little bit of a hiccup here over the next month.
All right, so Rick, as we take a look at the technicals here on Valero, in this sort of policy uncertain energy space, of course, but, what are the charts telling us?
Yeah, but overall, a nice move to the upside here. We have crossed above the old highs that we established here near 155, our green line. And critically, after the breakout to the upside, that's about where we bottomed out. So the old resistance became new support in this case, and that gives us a boundary to look for going forward. If we were to look at the longer term view slightly, our lows came in here during the tariff news shock. We have an upward trend line that you could draw here. Not really the greatest trend line, doesn't really connect. Just trying to show the illustration of a significantly higher lows at this bottoming point here. You could draw another boundary line going across the highs here. It's a more modest slope. The bottom line is more steep here. So that together would give you something of a rising wedge type shape. You could also draw an accompanying trend line here as well that would be a bit steeper, so something else to consider. But we are topping out right around that line near about the 163 level or so in terms of closing prices here. Was not able to make a new intraday high so far. But now we can see our moving averages all still trending upward, not really even near the fastest one of all, the 9-day EMA. However, the 21-day EMA in yellow lines up with that 155 level, so that kind of stands out from a technical perspective. A bit of bearish divergence here as well, as the RSI also moves below that overbought area. So a bit of a bearish signal there here, but not really any kind of collapse in stock price yet. So finally, if we were to add our other studies, volume profile and standard deviation channel, we're zoomed in on our chart here. This is still our yearly chart, but you can see this is the level to the downside that sticks out. We have a volume node just above that area near 157. Not really a big one, but that's all we've got to work with right now. We have bottomed out near that +2 standard deviation channel as well, near 161. Could be another downside area to watch. The +2 channel comes in at 172 approximately.
All right, so Dan, let's take a look at your next one. This is Workday. We had some big news on Workday this week. We had Elliott Investment Management disclose their $2 billion stake. We saw some analyst upgrades in the wake of that move. What's your trade for Workday?
Yeah, well, I mean, again, I think here is a classic example of what looks to be a building of a base in this market. So I think that, the fact that it does appear that we're on the verge of potentially breaking out of this range that's been in really for the last several months here. So again, I looking to capture upside, but have the opportunity to get put in the stock should we see a little weakness here. So today's trade example is buying the October 240-260 call spread just out of the money, and then selling the 220 put. If we do see some weakness, I don't mind picking up the stock at a better level, but reducing the exposure to the call spread so you can capture further upside if we do see continued breakout, as this does appear to me that it is poised to potentially take out the recent highs and then move higher from this level.
All right, Rick. Dan says we've got a potential breakout. Does the chart indicate that we're potentially in a breakout position?
We're close. The 220, 260, 240 levels, those stood out pretty much to me as well. 224 more specifically was the high point before we had our gap up that occurred a few sessions ago. 240, roughly about where we had our accompanying double top type highs just above that level. But what's $2 between friends? 240 is basically the same level. 257 as well was the intraday high from back here. So roughly 260. We were looking at pretty much the same levels here, big picture. Another notable downside level that caught my eye, though, was 210. That was roughly the site of our worst close. Not necessarily the intraday lows, but that was the worst close we had. That's about where we bottomed out again more recently before earnings gave us a bit of a boost. We are, potentially near that breakout point, though. That's what one of the reasons we look for these areas where price repeatedly stops and starts, because that can trigger the cascade of orders that develops into the breakout. So now we can see purple 252-day EMA lines up pretty closely with that 240 level as well, so extra emphasis on a potential breakout area there. RSI improving, crossed above the 50 midline, held on to its green trend line as well. To look at volume profile and standard deviation channels now, the point of control 240 lines up pretty closely, once again, with the same area here. So a lot of technicals aligning at that point. That's what we look for these breakout situations here. And then the volume picks up once again down here near that 225 level or so. So that would be another indicator that this is an important level too.
All right, thanks for that one, Rick. And Dan, for your third in our big three, we're going to talk CASY's coming off the heels of an Evercore ISI price target increase. I think they lifted them up to 580, up from 560. Right now trading right around 552. Walk us through this trade.
Well, yeah, another stock that I feel doesn't get the attention that it deserves, as it continues to show resilience through pretty much any type of market construct. And, again, efficient run company, something that we certainly keep an eye on very closely. And I think, the trend continues to be your friend here. It's had a significant move. Maybe it's due for a little bit of a hesitation here. But this trade example today really is to kind of capture further upside, reduce long-term exposure, and have the opportunity to push any tax consequence into 2026. So really today is just buying the stock, and then selling the Feb 600 call, moving again that potential exercise or assignment, just getting taken out of the stock if we get above 600 in February, and so that pushes a potential tax consequence into next year. But if we see a slowing in the stock or a dip in the stock, you get to capture that premium and lower your break even on the stock. And I think long term, it's still a long term hold.
All right, so Rick, with all that said, walk us through the charts for this one.
Yeah, we don't really have CASY's around here. I'm always very curious about the pizza here, but they must be doing something right, because the chart looks pretty strong here. 527 here was the level that I highlighted, a repeated series of highs that we just couldn't quite crack above here. Then, however, earnings gave us the boost that we needed to break above that resistance level. For a while, we were forming a megaphone type pattern here where we have our two boundary trend lines there diverging apart from each other. One of the more tricky patterns to trade. Your targets are continually moving apart from each other. It signals that volatility is increasing. However, earnings, kind of rewrote the story here. Now we have topped out near 571, 571.57 to be exact here. You could draw this boundary line going across these lows here. We're right about at that area right now. So something to consider as we progress through this trading day. Our 21-day exponential moving average roughly lines up with that series of highs near 527. It's a bit above it, but you try to look for the general areas where these things coincide here. RSI faltering somewhat as well below that overbought area, but still quite high, still favoring the bulls. Look for a crossover back into the overbought area as a sign of further strength if things start to recover. Finally, we can see our volume node, the only one that's really close to current prices, comes in right about here near 558 or so. Our +1 standard deviation channel, pretty close to where price topped out recently near 574. Finally, the bigger volume in the near term is this whole general area here. 520 and 510 are the specific levels that really stand out to the downside. So that range area would be important to hold if things start to retreat.
All right, Rick, we appreciate you walking us through the charts on these three for our big three. Dan Deming, of course, managing partner at KKM Financial. Thank you for your picks today and walking us through your three trades. Again, thank you both for being here.